Hi guys, this is Wave 618. Alright, so it's the 10th of March 2018 and it's currently 8:40 AM GMT. Okay, so just carrying on from my last video, so standard WXY pattern there. We're looking at the 4-hourly chart on Bitcoin right now. So yeah, very eventful day. The last couple of days have been very eventful. Yeah, so I was explaining not to trade this purely because it's a corrective pattern and there's many different ways of correction patterns forming. I believe in total there's over 30. Yeah, so what happens is if you keep trying to catch the bottom of the corrective pattern, whether you think it's going to be a triangle, a regular flat, an expanded flat, you're always going to be trying to catch the bottom. And what can happen is it keeps breaking through, and that's where you can just keep end up losing money, and it affects your emotions as well, and it can lead to revenge trading. So when you lose a trade, you should always take a step back, and you need to refocus. You should always trade objectively. Yeah, whenever you lose in a trade, you should always remember you're going to be emotional. You're going to want to make that money back, and that can affect you from trading objectively and sensibly. So what I mentioned is in my last video, we're looking for a corrective pattern, and then we're looking for a 4-hourly candle to confirm that the pattern has completed. Yeah, so there is a pattern that has formed, and I'm going to show you that, and there is at least a 4-hourly candle. In fact, there's a daily candle that's confirmed, so I'm going to run you through that. Now, looking at this, I'm going to explain how this can be interpreted as an expanded flat. Now, looking at it on the 4-hourly, it's not so obvious. Reason being is, well, let's look at it on the daily and I'll explain. So let's zoom in now on the daily. You may be able to see it a little bit better now, and the reason is because you can ignore these candles, the wicks of the candles a little bit better on the daily. The daily chart is very good because the daily close is very significant. Generally, price closes at what is considered value for Bitcoin at the end of the day. Yeah, so that's why the daily close is very significant and perhaps more important than the wicks. Okay, see, the wick finished here, but the close was here. So if we draw our fibs and create our pattern using just the closing candles, we can determine what pattern this is. Now, let's just plot a fib extension. So first of all, let me label it first. So it would be like this: A, B, C. Yeah. Now we call it an expanded flat because A is here, B comes up even higher than the preceding major wave, and then C comes down even lower than the A wave. Yeah, this is the definition of an expanded flat. And breaking the waves down, as we discussed in my last video, this was made of 3 waves, this was made of 3 waves, and this is 5 waves. I'll have to show you that again because I've not updated that since. But let's do a fib extension. So if we do a fib extension from here, where the candle closed, rather than the wick, do it down to this candle close. Yeah, and then compare it to the C wave now. So if we include the wicks of the C wave, we can see it comes down to roughly the 1.618 or the 1.382 if we look at the bottom of the candles there around here. So it's not perfect, to be honest. It's not perfect, the Fibonacci extensions. If we put it right at the candle close, it comes down to roughly the 1.382. So again, it's an important fib extension. Preferably it would come to the 1.618, and you can see the candle, the wick does come down to that level. However, I mentioned that we're looking more at the candle close, which comes down to the 1.382. Alright, so that is one interpretation of this pattern. that it could be an expanded flat, and as I mentioned, the route from W to X was looking like a W X Y. Now let's have a quick look at what the fib extension would be, presuming we use this low as the bottom of X. So we've now got the 1.618 coming up to this 17,000 level. Yeah. So if that's W, that's X. Y is a 1.618 extension of W. Yeah. So again, that's fitting in with that target of 17,000. Okay. Now, lots of volume coming in. As I mentioned, daily candle here. This is what we call a hammer candle. It's on good volume, which is always good to see, and that suggests price is going to continue up. Now, just like we saw here, this is what we call a shooting star candle, and then it was on relatively good volume, not fantastic volume, and that's why it didn't come down too far. But as you can see, this one is on much better volume, so it's going to come up to at least halfway, and then we need to start looking at the, when I say halfway, I'm talking about halfway of this preceding wave. Yeah, you can expect it to come up to at least there. In order to confirm that we're on our way to Y, we will have to pay further attention to the subwave count. But yeah, this is what I was looking for. Yeah, before you get in on any pattern, wait for this confirmation that the pattern is finished, which is high volume, and a candlestick supporting a change in trend. If we look on the hourly chart, we've got some RSI divergence, so let's just get that. Here's your RSI, so very clear here. RSI climbing steadily, price was coming down, yeah, and now we've got a turning point, yeah. So RSI confirms a change in trend. The daily candlestick confirmed the change in trend. Volume had come in, and it had completed a expanded flat. So a few reasons there for a change in trend. I've also drawn some other lines which I'll show you now. Let's remove the RSI and let's go on the daily again. So some quite interesting lines. You may have noticed these lines on the chart. Now, so here we're on the daily chart, so we're quite zoomed out here. Now, before we made our move up to $20,000, there was quite a regular channel before it massively broke out of the channel. But until that point, until that breakout, there was a nice channel. So basically with this channel, I combined, I draw a line connecting the highs, and then I drew a parallel line with the low here. And you can see that there was resistance found at this point here and here. It broke through it here, but now it seems to have found support at this lower trend line. Yeah. So it's not the best line because obviously it's not including this low, it's not including that low, but I thought it might be worth considering because this pattern seems to have gone to an extreme here. So you've got to look for certain lines that may be giving it some support. There's a lot of blood lost here. People would have lost money trying to catch the bottom and trying to get in. As I say, you've got to wait for these confirmatory turning points. Now, in terms of the wave counts, so as I mentioned, I'll break this down. So let's go in on the hourly chart. So in my last few videos, I've explained how this is 3 waves down, this is 3 waves up. So as you can see, there's actually 7 waves. So it's an A, B, C, X, A, B, C, and this is an impulse wave 1, 2, 3, 4, 5, form up to here. So it's an ABC pattern altogether. So that 5 legs is the A, expanded flat makes B, and C wave is this diagonal 1, 2, 3, 4, 5. Now coming down, we've got 1, 2, 3, 4, 5. That's wave 1, and then we've got a running flat. Let's label this in fact 1, 2, 3, 4, 5, wave 1, and then wave 2 was a running flat, A, B, C, so wave 2, and wave 3 was a 1, 2, 3, hold on, let me see here. To be honest, this requires a 15-minute chart because it's very choppy, this. Alright, so let's draw this again. So 1, 2, 3, 4, 5, wave 1, running flat, so A, B, C, wave 2, and you got wave 3 being 1, 2, 3, 4, 5. So wave 3 came to there, and then you got quite a longer retracement, which is quite typical for a wave 4, and that was a ABC, A, B, C, 4 here, and 5 finishing here. So that was 1, 2, 3, 4, 5. Now just to confirm, let's have a look at our fib extensions. So if that's wave 1 finishing there, wave 3 was a 1.618 extension of wave 1, and what I got for wave 5, there's lots of different targets for wave 5. It's very variable, and that's why, again, why you should never try and catch the bottom. This wave can go to different levels. There's so many different targets for wave 5 using fib extensions and Elliott wave, so it's very risky to use just Elliott wave to predict the bottom. That's why we use these RSI, we use the volume, and we use the candlestick patterns. But one way of calculating it is if we go from the beginning of the whole move, go down to the bottom of 3, and extend that from the beginning of 5. So you can see it hit the 0.786. This is a common fib extension for wave 5. So it's a 0.786 extension of waves 0 to 3, yeah, or very commonly it can hit the 0.618. so often it finishes here, but this is a very common one as well, with 0.786 extension of waves 0 to 3. Okay, so it hit that quite nicely there, another reason for why it turned. Okay, so let's just delete that one. Now there's lots of different interpretations still available. I've described this as a big expanded flat, A, B, C. Now there will be people who have described it in other ways, so let's just zoom out there. So also people who are bullish will be calling this a 1, 2, A, B, C, 3, 4, 5. Now does 4 overlap 1? Yeah, it's come very, very close, so we need to zoom in. Now I make it the wicks have overlapped. So again, the question is whether the wicks are important. Generally the closing price is what we go off. The closing price of wave 1 was here, and which means it doesn't cross with wave 4. Yeah. However, if you include the wicks, you can see the wick here cross with this wick here, which would invalidate the move. However, as I've mentioned in the previous videos, the wicks can be excused because it's the closing price which is considered the price of value. Yeah, these wicks often represent market hysteria. It's people, it's retail traders pushing price beyond the respected Fibonacci levels, and then price is then corrected to a position of value when the smart money comes in. Alright, so let's just get rid of that. So that's if you're bullish. From the bottom here you've got a 1, 2, 3, 4, 5. Other people have said that this is a failed fifth, so 1, A, B, C, 3, 4, 5. I'm not such a big fan of this count because the volume didn't really start at this point. Yeah, I would expect more volume coming in for a new change of trend coming down, because this was a double top. Yes, there's volume here, but this volume represents this bottom here. It doesn't represent this top. Yeah, you can see at this point there's low volume. So yeah, I think that's less likely, although still a possibility. We will be looking out for it. When we do our subwave count up here, we will take that into consideration. And then there's obviously another suggestion that this is your W. People saying X finished here, and then Y is already being formed. So obviously I said that Y was going to come down all the way around here. We're talking about a larger degree now, so let me explain what I mean. I'm talking about this Y here. Just going back to the 4 hourly. So if that was WX, people are saying Y is going to form now. So this, of the Y, there's 3 waves down. This is 1, 2, 3, and it's going to continue down. So we have to look out for that. However, I think this, even if that happens, this will retrace at least 50%, just because there's a lot of volume in here, and there is an awful lot of volume, which makes me think it's less likely to just come down. I think it's going to, my primary count is that it's going to go up to here. Yeah. But we're going to have to look at the subwave count to determine whether it's going to make it up there. Yeah, so they're the points that I really want to make in this video. Main learning point is retracement patterns. Don't try and predict the low based on Elliott wave alone or Fibonacci levels. You'll end up getting stopped out and stopped out again. Yeah. Let people fight it out, let the bulls and bears fight it out, and then wait for the winner to form, which you can see the bulls have stepped in, are winning the fight here, and that's when you join the fight. Yeah, that's where you join in with the bulls, and you trade it up to a target of at least a 50% retracement, perhaps then take profits. But I'll need to give further updates before I say exactly what I would be doing around this level. But at the moment, it would be worth getting in off that daily candle, which again was very bullish. Good volume hammer candle right there. Yeah, it's a very nice candle. Alright, so I'll leave it at that for today, guys. So yeah, I hope you've enjoyed the analysis. Yeah, so obviously you can see a lot of changing counts. This is required in trading. You cannot predict what's going to happen. No one could have predicted there was going to be a massive shakeout here. A lot of negative media came out, pushed the correction pattern to its extreme. Yeah, this is the last place really that the correction pattern could have held. So whether that is a true hold or whether it's going to continue lower is yet to be seen. But I feel still that it's going to go higher. Often when you see price go to these extremes, it means that there's a big move happening. Yeah, when a move is obvious, it's less likely to be successful. It's when price is really pushed to the extremes and it's unexpected that it's going to go in the other direction. That's when it's most likely, or you're most likely to see a powerful move in that other direction. So keep that in mind. Trading is all about catching people out. That's how people make money. They fool other people. So have faith in this move still. Obviously the smart money is try to psych us out as much as possible. They made this a powerful move down, but this is a C leg of a correction pattern. It is typically impulsive. Yeah, so that's why it was aggressively moved down. Very typical for a C leg. Yeah, but that's the game of trading. They want to psych you out. They want you to sell your positions. So they create the negative media. They bring it down to an extreme level. They make you think all hope is lost. And then what do you know? Volume comes in, bullish candle, but a lot of people have been psyched out and they're exhausted at this point. They've lost too much money, so they're not in there. Whilst it's just a smart money that's left. So, all right, guys, I'll leave it at that. and I'll try and give regular updates. Yeah, if you've enjoyed the channel, please like, subscribe and share. The channel is growing nicely. You've shown all your support, which I really appreciate, and yeah, let's see what happens. Alright, take care guys.